Hey everyone, happy Thursday, April 10th. It's about 9 a.m. in the morning on the West Coast, and it's time for another market update. Well, over the last week, we got a big jobs report last Friday. We got great inflation data today, but however, the markets are distracted. Obviously, with all this tariff stuff going on, that's got all the headlines. That's driving the market narratives right now, and it's been all over the place. Like we talked about before, there's obviously two sides to this. Is it going to cause inflation? Is it going to cause a recession? Is it going to drive jobs back to America? There's a lot of great articles out there by a lot of smart people that you can go and look at. On the mortgage rate side of things, the one positive with all the stocks going down last week and crypto and stuff was that there's what we call a flight to safety, where people take money out of the more volatile stuff and put it into mortgage bonds, which tends to help mortgage rates. So that had been going on, through mid morning, I think, or so on Friday. At that point, we're at our best levels. The average rate was down to about, I think, 6.55. But since that point, there's been a big sell-off in bonds, which hurts rates. Going through yesterday through the pause in the tariffs. So with that being said, a lot of the experts out there weren't quite sure what was going on. There's rumors that or at least thoughts that it was margin calls, where people are having to sell these things to pay off to get out of those margin calls. That maybe some foreign investors, countries were dumping treasuries and bonds and stuff. Either way, it was a big sell off, and that was not good for rates. It made them jump quite a bit. And then, through yesterday, where, President Trump announced a pause in most of the tariffs for 90 days, that caused a big rally in the stock market and a little bit of a rally in the mortgage side of things as well. But I see this morning, stocks are down 1,600 now. So, it basically cut that rally in half yesterday. So things are all over the place. By the time you watch this, things might have changed again. So, right now, I think that's a big part of the problem is there's so much volatility. No one knows what's going to happen. No one can trust what's going to happen next. Are we going to stay with tariffs, or are there going to be new tariffs, no tariffs, whatever it may be. So there's a lot out there. So, we just got to hang tight until that happens. But like I said, going back to last Friday, we did get a big March BLS jobs number that came in at, it's supposed to be about 140,000 jobs created. It came in at 228,000. So big beat there. And then the unemployment jumped from 4.1 to 4.2%, which kind of saved us a little bit. So looking though, however, at this, the jobs number, keep in mind that there's two sides to this. There's the business establishment survey, which comes from, some payroll data, and then they exploit it out using math and whatnot. That came in at 228,000. Like I said, it was supposed to be 140,000. So much bigger number, shows job strength. However, they did make two negative revisions, which they do quite a bit, like we've talked about, to the previous 2 months. So February dropped by, it looks like 34,000 jobs, which is a big number. And then January dropped from 143 to 111, so 22,000 jobs. So more likely than not, this 228 number will be revised over the next 2 months down lower. However, that was a big number to begin with. One thing offsetting this, besides the markets being distracted by tariffs, was the unemployment number. So 201,000 jobs were added, 232,000 people joined the labor force. That made unemployment, more people in the labor force, less, more than the jobs, made the unemployment climb a little bit from 4.1 to 4.2. Still really low, but the higher that ticks, the more the Fed's going to pay attention. Remember, they have two mandates: they have to keep inflation low and to keep unemployment low. So the more this goes up, the better chance that they would cut rates. The other part about this jobs report that was kind of in our favor was wage inflation. So we've talked about, the more we make, we tend to spend more. The markets tend to look at that as inflationary. We don't want inflation. And so the average hourly earnings year over year dropped from 4 to 3.8%, and average weekly earnings dropped from 3.7 to 3.2, which is a pretty big drop. So, besides the tariffs distracting everybody, those two things kind of offset that bigger jobs number, especially in those revisions. Hopefully the market saw that, you can't really trust that 228K number. Next thing we got today was a great CPI report. CPI was supposed to go up a little bit. It actually came in negative for the month over month for March at negative 0.1%. That caused the year over year to drop to 2.4%, which I believe is the lowest for about 6 months. And the core only went up 0.1%, and that caused that to drop by 2.8%. However, I noticed in all these articles, it's talking about, inflation drop, but tariffs, and that's going to be inflationary in the future. So that's kind of the narrative there. So already the financial media at least is prepping everybody, or basically saying these, kind of ignore these numbers because things are going to get worse in the future. We can't count on this to continue. Initial jobless claims came in right at as an estimate. 223K was the estimate, came in at 223K, which is amazing that that number could be right on. But it's been kind of around this number for quite a while now, really low. When that starts ticking up, obviously more people are getting laid off and applying for unemployment. Where does that leave us? So the average 30-year, like I said, was last Thursday was at 6.63. Midday Friday, or like I said, early Friday was at 6.55. Midday yesterday before the pause, we were at 7. So a big jump there. Got a little bit of a drop to 6.95. Not great to go in the opposite direction. Like I said, these tariffs, whatever's going on in the markets, is just a lot of volatility. Take these tariffs out of the equation. Kind of mixed BLS jobs report and a great CPI report, and we probably would see a lot of positive movement. However, like I said, markets are very preoccupied with tariffs. What do we have upcoming? So we got important dates. We got inflation, the PCE, the Fed's favorite form of inflation, at the end of this month. Then we got another one of these BLS jobs report beginning of May, and then May 7th is the Fed's next meeting. Right now, at the high point, or the point when people think or thought the recession was going to happen the most last week. I think it was at 55-45. So 55% they would do nothing, 45% they would cut. Yesterday, after at one point it was down to 85% pause, 15% cut. Today, I think it's at like 72-28. So right now, about a quarter of a chance that they would cut rates. But like I said, a lot of that is tied to whether or not they think there's going to be a recession. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, let's just hope things calm down a little bit, and have a great week, everybody. Thanks a lot.